Good morning, ladies and gentlemen. It's a great pleasure and honor for me today to welcome you all to our IBF Summit 2021. A particular welcome also to the members and friends of the International Bankers Forum. And a great thank you to the distinguished ladies and gentlemen performing as keynote speakers and panelists, as well as participating via digital link from our global audience. Most recently, we have counted some 1,000 participants for our IBF Summit. We are proud to announce the first IBF Summit. This new top virtual format is designed to combine year by year premier topics on banking, finance, investment, political matters, and the markets. The 2021 focus of day one centers on payment, on day two on AML and CFT. Looking ahead, we will continue the IBF Summit also next year and thereafter. Please save the conference days on 2nd and 3rd of June 2022, already now. What amazing new world of payment. It's all about economics and business at its best, searching simple solutions for complicated matters. Large payment platforms that haven't heard of as a short while ago, all of a sudden boosts of values of billions of dollars. Only payments survive services ready to become most expensive startups. To be honest, some modern competition reminds you of the Dutch tulip craze from 300 years ago. Crypto assets are in the midst of finding their own ego in feasible solutions and want to become useful. What is the future of cards? At the same time, in Europe and beyond, there are serious efforts to consolidate and offer broad solutions like the European Payment Initiative. The International Bankers Forum has been running a state-of-the-art non-profit platform for the common objectives of financial markets competitors. We do this in a role as neutral organizer and facilitator for target debates. Actually, the IBF has been acting as a think tank for already more than 30 years with some 1,000 institutional and personal members in the IBF Forum and the new network that comes almost by itself. We are proud to have powerful European players among our members, in particular, the European Central Bank and the Deutsche Bundesbank. Lieber Herr Balz, dear Mr. Balz, many heartfelt thanks to you and the Deutsche Bundesbank for our cooperation in making today's European Payment Conference possible. Already for several years, the International Bankers Forum had wanted to institute a European Payment Conference. With your first mover confirmation to deliver a keynote at today's summit conference, the project now has come to life. We highly appreciate your personal support and would be equally pleased if the date of 2nd June 2022 is firmly anchored in your calendar. I now would like to also thank Professor Bott, who will moderate the first panel after the keynote of Mr. Balz and will further open the doors into our payment topics. Dear Mr. Balz, lieber Balz, the floor is yours. Thank you.
Well, thank you, Mr. Maliki, Mr. Bott, colleagues, ladies and gentlemen. And first of all, thank you for your warm welcome and thank you for giving me the opportunity to deliver a keynote speech at today's conference. The Euro football tournament kicked off recently, but things are rather different this year. There will be fewer gatherings in person and no public viewings, as we say in Germany, with thousands of fans. Instead, I've already heard about public viewings taking place in the digital sphere, with fans using virtual conference software to get together and cheer on their favorite team. Fortunately, the games themselves are taking place in real life with a considerable number of fans in the stadium and not virtually. The same still cannot be said for most meetings in the business world. And therefore, I'm also speaking to you in a virtual digital format today. However, digitalization has also found its way into football, with teams using the likes of big data analytics to improve their performance. And we all know that money plays an important role in football business as well. So there is some common ground with the topic of our panel discussion and my keynote today. It is about a rapid change, digitalization and digital money, and central bank digital currencies in particular. CBDCs are one of the most exciting developments facing central banks today, not just in Europe, but worldwide. Many questions need to be answered. So let me name just three of them. What opportunities are associated with CBDC? Is there a need for banknotes to go digital? And what features would cater to the demands of consumers and enterprises in both the financial and the industrial sector? Maybe today's conference can shed some more light on the different components of these important questions. Market experts in Europe and around the world are engaged in a lively debate about these questions, and several central banks are looking into the opportunities and risks associated with central banks' digital currencies. A survey among central banks by the Bank of International Settlements shows a shift away from mainly analytical work on CBDC towards technical experimentation, with more than 60% of central banks reporting that they are running practical experiments. However, central banks would be well advised to be diligent and take their time, because CBDC is a game changer with huge opportunities, but also a number of risks. Today, I would like to outline the issues I believe we need to tackle in order to create a safe, efficient, and future-proof digital currency for Europe. And remember, just as in football, some well-executed tackles can win the game. To lay the groundwork and provide some food for thought for today's discussion, let me briefly present three major trends in payments that are driving the debates on CBDC. The digitalization of our economy, the declining use of cash, and the emerging new forms of money. Our economy is becoming more and more digital, and the transformation is even gathering pace. E-commerce and all kinds of other online services are surging, and they are getting a further boost in the context of the COVID-19 pandemic. The Internet of Things is making machine-to-machine communications a reality, and it will likely result in a need for machine-to-machine payments. And the pace of digitalization has probably never been faster than it is today. These developments are increasingly calling for safe and efficient settlement asset, including the appropriate infrastructure in the sense of a digital currency that can be seamlessly integrated into almost any kind of business process. And at the same time, we are seeing a decline in the use of cash, even here in our country, in Germany. The current pandemic has increased not just the use of cards, but of contactless payments and mobile payments in particular. In a survey on payment behavior in Germany, conducted by the Bundesbank during the pandemic, we found that the share of cash for everyday transactions has fallen from 74% to 60% over the last 2 years. Admittedly, it remains to be seen whether this tendency will persist in the post-corona period. But what we are currently witnessing is a considerable change for a country that has been strongly accustomed to paying in cash. And a third trend is the emergence of new forms of digital means of payment. These can be privately used means of payment, such as stablecoins, as well as CBDCs issued by foreign central banks. For now, these alternative means of payment are still in the development or testing phase. However, given the speed at which the technology is developing, their widespread adoption might be closer than we think. If these forms of money become widely used in the euro area as a medium of exchange or as a store of value, this could have severe implications for the role of the euro, for the payment industry, and consequently also for financial stability in the euro area. So what are the opportunities and challenges of CBDC? Three trends I have just outlined show that in an evolving payment ecosystem, central banks need to be prepared. And like in football, you need the right forward-looking strategy to succeed. So what opportunities could CBDCs bring? CBDC would be a third form of central bank money alongside cash and bank reserves. CBDCs promise to combine the improved efficiency brought about by digitalization with the safety provided by a central bank in one single means of payment. And yet, introducing such new forms of money could have a profound impact on the financial system, particularly if CBDCs were not confined to monetary counterparties like central bank money today, but were instead made available to the general public like cash. If it is not properly thought through, this kind of innovation could have unintended consequences. And that is why several working groups in the euro system are testing possible technical designs of a digital euro and analyzing the economic implication of its issuance. There are various challenges that need to be tackled. To name some key aspects here, we have to address the risks a digital euro might pose to financial stability and monetary policy. And one important aspect to consider is this, in this regard, is the role that banks and other payment service providers play as intermediaries in the financial system. Other aspects discussed in this context include holding limits. Any solution must be sufficiently scalable and secure, and particularly in view of increasing cybersecurity risk. And if a solution for paying offline with a digital euro, that is, without an internet connection, was offered, it would have to be set up in a safe and secure way. To ensure acceptance and trust, a digital euro has to be made accessible to all population groups without barriers, but in a safe manner. And money laundering and terrorist financing have to be effectively prevented. As you can see, it is obvious that a central bank digital currency must be designed carefully. There are potential advantages such as safety and efficiency improvements in everyday payments, the availability of new services and productivity gains due to the provision of money that could be used in programmable environments. But these advantages need to clearly outweigh the potential risks that I mentioned before. In any case, the digital euro must be designed properly to mitigate all those risks. The euro system is taking a comprehensive approach to address these challenges. First, I would like to mention the report on a digital euro, which was published in October last year. It was prepared by the high-level task force on CBDC, where I act as the representative of the Bundesbank. The report describes possible scenarios that would require the issuance of a digital euro. And second, the euro system widely engages with citizens, enterprises, the financial sector and public authorities to get a detailed picture of their needs and also of the benefits and challenges they expect from a digital euro. In April, the results of a public consultation on the digital euro, which attracted a record number of more than 8,000 responses, were published. The public consultation confirmed that data protection would be the most important feature of a digital euro, both from the perspective of participating individuals as well as professionals, and here in particular, retailers and companies. Additional aspects, including security, the possibility of being able to pay throughout the euro area, that means a pan-European reach, no additional costs and offline usability, that is the possibility of making payments without an internet connection. And then third, experimental work is currently supporting the analysis of possible technical designs of a digital euro and their implications. Further dialogue with market actors and other central banks regarding CBDC is taking place. So what is the outlook? From my perspective, there's no matter what the final design might look like. I see various core features that offer valuable guidance when discussing the issuance of a digital currency for the public. Summary, particular attention should be paid to the following aspects. The needs of users, be they private individuals or companies, should guide all further planning for the digital euro. And therefore, the use of money and programmable applications should also be taken into consideration. This is because programmable applications could form a useful part of digital processes, making them a core building block of an innovative economy. And a digital euro should also allow the private financial sector to create services based on it. The role of banks in our economic system should not be changed fundamentally as a consequence of the issuance of a digital euro. CBDC might not be a panacea for all the challenges that payments are facing today. However, it is well designed and then set up thoroughly. CBDC could be an attractive additional option to improve payments in Europe and even worldwide. So this summer is going to be a time of decisions, not just in European football, but also in payments. In mid-July, the Europe Championship final will decide which national team will become the champions of Europe. And at the same time, the ECB Governing Council will decide whether to launch an investigation phase for a digital euro project. And if the ECB Council decision is positive, we do not want to waste too much time. ECB President Christine Lagarde has suggested a period of no more than 4 years for the digital euro to go live. Some may argue that we have already lost too much time and that a digital euro would come too late. I don't think so. We might already be in the second half of the match. However, as Sepp Herberger, the legendary national coach who took West Germany into victory in the 1954 World Cup final once said, and I quote him here, "The ball is round, the game lasts 90 minutes, and everything else is just theory." So there's still everything to play for in European payments. So let's look ahead, let's work together, and let's move forward swiftly but thoroughly on the path to building future-proof European payments. Thank you very much.
Thank you, Mr. Balz. That was an excellent scene setting for our discussion going ahead. And as you said, times are really different. My team lost the opening game. French played excellent. So, and as the time is so different, I think analysis of market needs seems to be a very well started point for design of a new product, a new service, or even new means of payments. Therefore, I would like to start our discussion today with an overall question, which I would more or less ask to all the participants. Why do European central bankers and commercial bankers believe that there are market needs, demands for the potential, as you named it, game changer, the European Central Bank digital currency, the digital euro? So I would like to phrase my first questions to Mrs. Nathalie Ofovre, Director General of Financial Stability and Operations, Banque de France. So a very warm welcome to Paris. Not only your soccer team is excellent, the Banque de France has published very, very interesting documents on central bank money. So, Mrs. Ofovre, from the perspective of a French central banker, what are the main needs in European economy to request the euro system in very strong engagement in central bank digital currencies to issue a digital euro? Or why do you believe that European citizens and European companies are maybe even desperately asking for a digital euro?
Thank you very much. First, I would like to thank the organizers for inviting me to participate in this fantastic panel and share my views on the digital euro. I'm not a specialist of football, but I think that the winner needs a strong team, and I think we are working on this issue as a strong team within the euro system. So we may be successful. I would say that even if there are differences in the use of means of payments in the various European countries, I would speak more as a European central banker, actually, than a French one, considering the deep transformation that is underway in the payment landscape worldwide. And this transformation in the payments and the market infrastructure that was very well presented by Burkhard Balz raises a number of strategic challenges for the European economy. And these trends call into question the role of central bank money. That's why it's also very important for us, and the ability of central banks to fulfill their mandate, which involves preserving financial stability, implementing monetary policy, and ensuring safe and efficient payment systems. And in that, against this background, I see three main trends that could challenge our role, mandate. First, increased use of private digital payments and development of private tokenized settlement assets. They could reduce the place of central bank money and obstruct its anchor role in the financial system. Currently, we have a permanent exchange and rule of central bank money through the banknotes, in particular for the public. And it is very important that this anchor role be kept. There are new entrants, such as fintechs and big techs, whose activities are based on their ability to exploit personal data and leverage network effects. These new payment solutions that these actors could offer could also reduce our monetary sovereignty. And maybe last, the development of foreign CBDC could also affect our sovereignty and reduce the international role of the euro if we are not prepared to issue a digital euro. So the euro system needs really to be proactive and designs early responses to these challenges. I would like to stress, however, that there is no one single answer to these challenges. A variety of action is needed to ensure that we can maintain our strategic autonomy. Part of the answer lies also in designing a fair and comprehensive regulatory framework. There is not a single solution with the CBDC. The regulation is very important to ensure that these new entrants and activities are properly regulated. Also, support to private initiatives that reinforce European integration and strategic autonomy, like the European Payment Initiative, EPI, that are also strongly needed. So it's a full range of action. But of course, we need, as central bank, to get ready to issue a digital euro in order to fully address all the challenges that I outlined. I think that it's a global ecosystem, and we can't say we have a digitalization of some part of the system and not of other parts. So introducing a CBDC could provide a new and efficient tool for central banks to keep fulfilling their mandate, enabling them to foster innovation, as Bogart mentioned, safeguard monetary sovereignty, and make available to all citizens, also in a digital system and in a digital economy, all means of payments in all forms, meaning in the form of public money as well as in the form of private money. And the public money would ensure a totally free, secure, and protective of the privacy of the public. And this would provide the encouraged role of the money, which is very key to the monetary sovereignty. I really think there is a growing awareness of these challenges among citizens and companies. The large participation from citizens and corporations alike in the public consultation organized by the ECB a few months ago showed that there was a keen interest from the public to take part in the ongoing discussion. So regarding the use cases, of course, it will depend on the design and the prioritization we would like to do. But we really think there is a wide number of use cases, and we will have new use cases coming in the future. So we need to define an overall design that can be gradually implemented over time, depending on these priorities that we associate with each use case. We have to have this holistic view, taking into consideration challenges, risks that need to be mitigated, and the potential new use cases. If I can give a few examples of the value added we can already see with a CBDC, just a few examples. The first one is maybe the CBDC could be a unique opportunity to address long-standing pain points in some payment segments, in particular in cross-border payments. It's still to be checked, but a CBDC could, if properly designed, contribute to the reduction of the current frictions in cross-border payments. There is a clear momentum worldwide to facilitate cross-border payments. You know that we have the G20 roadmap on this, and maybe the CBDC could be a key point to alleviate these pain points. Of course, CBDC could achieve greater efficiency, security, and privacy protection in retail payments by offering a wide range of payment solutions to users, and also a freedom of choice, which is very important in this landscape. And I would like also finally to underline that CBDC should serve wholesale purposes as well. We think it's a very important feature that CBDC should offer. It could allow crystallization of innovation and generate clear efficiency gains for financial markets. It could minimize settlement risk by providing a liquid, risk-free tokenized asset that can be used for the settlement of transactions involving tokenized financial instruments. It would enhance speed with same-day settlement of securities versus T+2 currently, for example. It would enhance availability, making central bank money available to settlement payments on a 24/7 basis. So we see also large opportunities in the wholesale area, and that's why we are thinking that the design of the CBDC could be open enough in order to cover all this usage. I stop there. Thank you.
Thank you very much. So let us jump immediately from Paris to Vilnius. So I'm very glad to have you here with us, Mr. Juriglav. He's member of the board of the Central Bank in Lithuania. So as a chair of the Bank for International Settlement in Innovation Networks Working Group on Central Bank Digital Currency, you probably can share with us some live issues, some good examples of what central banks have identified as main issues, why we need the central bank digital currencies, and maybe you can even share with us some interesting business cases you have already in mind, not only to be defending against privately issued stable coins and foreign central bank currency, but also to bring Europe forward. So we are looking forward for your examples.
Thank you, Chair. First of all, thank you for this wonderful event. I think it's really timely and really a very relevant policy issue that, as you, Chair, rightly pointed, is not only important for the digital euro, but as the group which I'm chairing shows, it's very relevant across all the central banks across the world. And the BIS Innovation Network Working Group on CBDCs has identified problem statements which are showing what are the main issues that we as central banking community see as relevant to be resolved going forward. Without going into very particular detail, it would not surprise you that the issues of programmability, what are the minimum set of requirements for CBDC to have, which would allow it to be programmable, or that should be left to the private sector, is the question. The question of privacy and anonymity, the interplay between those two aspects, and how can that be balanced with other regulatory and prudential requirements, not to mention the anti-money laundering initiatives that we have. So we need to see the transparency of the transactions and the need of the citizens, which is reflected in the digital euro survey, which was mentioned also today. The citizens are seeing privacy as the main issue. How do we balance those issues? So all of those issues are live issues that global central banking community is very intensely focusing on. And the third one, just to finish on that point, is do we see central bank digital currency as a very close substitute to physical cash, or that's a category in itself? Because that has very significant implications in terms of technological implementation of central bank digital currency. How many transactions can be executed offline? Do we aim for the offline usability of central bank digital currency? All that is just an instrument in itself. And here I want to switch to another set of argumentation. We are, just to utilize Mr. Balt's analogy, we are referees in this game. And the good referee is the one which is not making one team win or the other lose. It's the one who is not being seen. And in that analogy, I believe that the success of central bank digital currency should not be judged by what proportion of transactions will be utilizing central bank digital currency, or that is significantly being taken by the society. Because I believe that the main reason why we are talking about central bank digital currency is not due to monetary policy concerns, is not due to financial stability concerns. It is due to anti-competitive and competition issues. The emergence of not even national, supranational data giants who are pushing all the other private market initiatives into the fringe. And payments, everyone on this panel knows, is a business of scale. And in the previous world where we are still, of course, living, cash or physical cash is this balancing instrument, which is an instrument providing an ability for a citizen or firm to escape this data monopoly. But if the world is moving into the digital world, digital finance, digital economy, cash all of a sudden is not an instrument which is allowing a citizen to not to be part of that system. And that's why the emergence of private initiatives, stable coins, all of a sudden become attractive to citizens. It's not because they believe that they are more stable, providing better cybersecurity protection or even consumer protection. So that's the reason why we as central bankers, as referees, we should provide an instrument which allows citizens not to fall prey to the data monopoly. So the interplay between privacy, efficiency of payment systems due to the scale is where we are playing this referee game.
Thank you very much. So let's jump to Berlin. So you see that are the real advantages of modern technology. So Mr. Krautscheid, Andreas, he is the chief executive from the Bundesverband Deutscher Banken. As we have just learned from Mr. Juriklas' description, the question is about competition and attractiveness. In which operational areas does the German economy really require new means of payments to stay in this fast-moving digitalization really attractive and really in the forefront, to be really competitive and attractive for the European citizens and for European companies? As we have heard now, the opinions of 3 central bankers, now we're looking forwards for the most important, interesting commentation from the commercial banks.
Yes, thank you. And thank you for the invitation. And yes, the 9:40 and 28 degrees Celsius, a very warm welcome from Berlin this morning. Jumping in and trying to remember everybody, when we started 2 years ago to deal with CBDC activities and discussing what could it mean to the banking sector, we started with discussing a project which is actually not very seeable or visible. Libra, Facebook's Libra. Who's talking actually about that? So that shows a little bit how far we came already in our discussions with hundreds of workshops and different projects amongst all participants. So I think we have gone already a long way. We're not close to 0.0. And this is why we are really expecting when the ECB will make a decision in July, probably, to start the project. We're very much looking forward because we know it's not 0.0, we are far beyond. If it takes 4 or 5 years, as had already been mentioned from Burkhard, let's see and work on it, because there is a high support from the banking industry for this project. We are extremely interested to be supportive. We see us as a partner of the central banks in this project because there are several drivers. Some have already been mentioned. Also from our point of view, dealing with Libra and Diem, there is a point of aspect of sovereignty, of European sovereignty and independence on the currency sector, and protecting the euro in the digital world is also important for the banking industry. But most of our efforts, we are really working hard on all these subjects, is driven by the needs of our customers. And this is why I'm very grateful to Burkhard when he mentioned, let's find a design that meets those needs, that is oriented on these needs of private and corporate customers, because at the end of every workshop that we do with our corporate customers, the message is hurry up. We need it. Hurry up. We need it. Everyone knows it is a complicated project. It's a risky project because also for us, it's extremely important what will be the role of banks in this new system. We see all the risks of disintermediation and as well as structural disintermediation. If you give every European citizen access to a CBDC wallet, what does it mean to our deposits? What does it mean to our balance sheets? What about the risks that have already been mentioned on cyclical disintermediation? Bank runs, digital bank runs, how to protect us and the system. So I think there are already some very good ideas how we could solve those problems. But Volker and me had already a discussion on that this week, and we finally found out there's only one shot. We have only one bullet to solve this project, to bring it to an end. So what is driving us? It has already been mentioned, Industry 4.0. Our customers are working intensively on DLT-based proceedings. And there is always a necessity for payments. We see more and more pay-per-use cases, use of machines, sometimes for seconds. So machine-to-machine communication also organizing the remuneration of such services without any interference of any person. Very quick, very reliable, and even though it is privately organized, it must be integrated into a central bank system because of security, reliability. There's no, so to say, simple private solution. We are working on SEPA-based trigger solutions, but it is just an intermediate solution. So at the end of the day, what we need is a programmability that has already been mentioned, and it is a complicated question. Who is able and who is allowed to do which programs? Who is defining for which purposes the money can be used, the digital money? So these are the aspects in the DLT-based production lines. But if you realize there is also an increasing DLT-based trade in digital assets. You read about arts, you read about real estate, you read about usage of rights. So all DLT based, and we need payment functions in this world. So who's organizing that? From our point of view, this is an interesting task for banks, which should be able not only to rely on the central bank system, but also on a technological system that is if you look at things like KYC and AML problems, all these things have to be organized and well organized in such a new DLT-based system. So big challenges for all participants in this system and many open questions to be very clear. So we come back to the 4 years of Burkhard. So maybe it's we need this time to solve those questions because it's not only a problem on the central bank side, it's also on the commercial bank side. There are a lot of open questions, but our customers coming from the IoT world are pressing us intensively and ask for solutions. We believe that the start of the ECB will could also be a push signal for many actors in this field to be heavily involved in this procedure, because we are doing already a lot of workshops, of conferences and so on with our customers, but also with people from the finance ministry, also from our central bank partners. Many people are working on that. We are really pushing very hard on the project. We are trying to be a good partner for the central banks because we believe that it must be a complete system that needs all the things that we have found out in the reports of the ECB. People would like to see reliability, control, privacy, no additional costs. Also interesting. That is the question of competition that you mentioned already. Our industry customers expect a not only technological perfect solution, they expect no additional costs. It must be cheaper, not more expensive. So this needs to bring all these needs together within a relatively short period of time will not be that easy. But once again, we feel and we realize a real good and very positive move in this project. My impression 2 years ago was when Libra and all these things came up, people were very scared and were very, if you talk to politicians, very nervous. What could it mean to the control of a currency if such things are organized on a private basis? Is this a technical new development which is out of our control? No, it must not be. We are able to organize these things in a very reliable way, in a way of cooperation between industry, banking industry, and central banks. And it could be an enormous important pillar for this European sovereignty to show, yes, we can do it in Europe. We are able to organize such a system, and the industry is benefiting, private people, customers are benefiting, and it's working. A lot of work to do, but interesting work.
Mr. Koschatz, thank you very much. Now I would like to get our second voice from the commercial bank an opportunity to share with us your opinion about it. So Mr. Lorenzo Bini-Smaghi, Chairman of the Board of Directors of the Société Générale in Paris. We heard now from Mr. Croucher already some requests, especially from the wholesale side. Are there different requirements in Paris from the French customers?
Well, thank you very much for this invitation. Let me say a few words as an introduction. First, I think it's very good that the public sector, the official sector, and central banks are ahead of the curve in Europe and have been looking at the issue rather than being behind the curve. The issue is complex, I have to say. There are many things that need to be clarified, and I think it's fair to do it in a frank way. So as to avoid finding out at the end of the process that maybe what we have been doing has not really achieved our objective. There are many different issues. One that I would like to clarify is, are we talking about retail or wholesale? I think on the wholesale sector, there's a lot of work going on actually between the private sector and the public sector. We are working with the Banque de France, for instance, on several initiatives, and there is clearly an issue and a demand to become more efficient in payments and make our financial system more efficient. But I think the whole discussion is really on the retail. I think it's what I miss in the report by ECB is what is a digital currency. I mean, how does it work? When I go to the store, I know how a banknote works. I buy something, I take off my wallet, and I give banknotes, and they give me change. And this takes, times it requires me to have the bank. Otherwise, I give my credit card, and then I have to do a PIN or something like that. Or now I use my telephone. I click, and it's even quicker. How does it work with a central bank digital currency? Do I have to take up my phone also and click? And if this is the case, what's the difference between the digital currency and the private currency? Is it that the transaction with the digital currency is secret? Because this is what the private sector wants to, this is one of the demands by the private sector, confidentiality. Now, if I use my account with Societe Generale, this is not secret. It has to be aligned with anti-money laundering, tax evasion, and so forth. Is there a difference between the two? Is it for which amount? Is it restricted for me and for the shop owner? So these are, I think they need to be clarified. Then there's, I think another issue is the cost. I mean, how much would it cost to have for each citizen in Europe, 450 million people, this whole infrastructure? I mean, this is not, to print banknotes costs money, and it's a taxpayer who pays for that. I think it would be useful to have an idea of how much this would cost. Because if in the end, presented with the choice I mentioned, people will not use a lot of this digital currency, then we may have constructed a big, huge thing that is not used. And there are so many other issues that were mentioned in the discussion. I think that the central bank is aware, but I think it's useful to be transparent in this for the consultation with the public sector and the end users to be really efficient. Because in the end, what is motivating this? And to be a bit provocative, maybe, is it really the demand for a product? That is when I go to the shop, do I really need something or when I am at home, do I need really something digital different than what I really have now? Do I need something similar but is less costly? Is the price the cost? Or do I need something that is secret? And if this is the need, are we really building something that is in line with that? And is it cost efficient? My fear is that this is not the question that has been asked. The question is, we have Libra, and let me be explicit. We have Libra, we have the risk of a digital renminbi. So the fear that the monetary authorities have is that I go to the shop and with my phone I pay with the Libra, and this intermediates totally the ability of the central bank to control. If this is the case, I think it would be useful to look also at alternatives. I mean, can Libra really be a Libra type or a renminbi? Is this really a fear that is justified? Is this the best way? Is it the best way to avoid the competition with a digital renminbi, to build our own digital euro? Is this the best way or should we regulate better? Because in the end, if I want to use a digital renminbi to pay for something, and my interest is maybe to avoid taxes, to avoid anti-money laundering regulation, maybe I want to launder one. Is it, in the end, will I use the digital euro or not? Maybe I will continue to use the Libra or the digital because it is more aligned with my, I would say, criminal or non-legal objectives. So to conclude, I think we need to have a good understanding of what the private sector needs, what the citizens need, and whether the best way to achieve it is to build indeed a digital whole infrastructure, digital euro, or to better regulate the existing private sector work that is done in Europe. I will not talk about all the implications on financial stability, on the ability to control the money supply, and also the balance sheets of banks. But these are, I would say, the second step issues. But I think this, in any case, the work is needed, and of course we in the private sector, we are willing to work. But I think it's important to understand what are the finalities, what are the objectives for the end users, for the citizens in general. Thank you.
Thank you very much. the time is running so fast. So let us focus on the remaining 5 minutes, maybe on quick and precise answers to the decisive question: how to make the digital euro more attractive than any stable coin, than any foreign central bank digital currency. So Mr. Balz, one question could be to simplify the clearing process. What do you think? Is that really a main issue? And is there something we really can do?
Well, very, very good question. And of course, it is an important issue, but mostly, of course, here for us, smooth and efficient payment streams are definitely, as I said, an important issue. And we really need to solve this point. But at the end, the most important thing is, and here I agree with Lorenzo, what the consumer, the citizens in Europe really need and want to have. And this should be really in the core of our thinking, of our analysis, and that is what we have to deal with within this, well, very likely digital euro project.
Mr. Juriklas, your central bank already allows non-banks into the settlement of the central link system. Can this be considered already the first step in the direction of an account-based central bank digital currency?
Thank you. I think that different times require different solutions. The decision by the Bank of Lithuania was addressing a very specific issue to facilitate competition between banks and non-banks. Whereas I do not see central bank digital currency in a kind of retail sense being provided on an account-based form. I think these issues of privacy and preventing data monopolies, or how to ensure that those monopolies are being controlled, the citizens have the right to monetize their data, will be at the center in deciding the shape of digital euro or digital US dollar. The ones that will provide the right balance, they will have the biggest usability of that implementation.
Mr. Krautscheid, you already gave us some examples. What do you consider to be the most important one, the retail side or the commercial side?
I guess there may be some remaining doubts, like Lorenzo mentioned already, if it is an everyday thing for every people in the future. But I'm absolutely convinced that in a DLT-based economy, we are working with smart contracts, that there must be included a DLT-based currency payment, because otherwise there would be huge problems in the value chains of the Industry 4.0. So there is a lot of evidence that we need it, and there's a lot of chance that we can it.
Mrs. Sofofa, how big are you in favor of having a programmable new currency? Is it necessary?
Sorry. I really think that we have seen different perception of the use of the CBDC, wholesale, commercial needs, retail needs. And in the future, programmability will be key in order to address the possible use cases, because the money is not something that you can split among sectors or activities. There is a fluidity. There is it's a single currency which circulates among the sectors. So I really think that programmability will be key. Also, in order to implement the features of the central bank digital currency. For example, if we want to organize a remuneration, or if we want to organize to set a limit, a ceiling to the holding of CBDC, we could use programmability. So I think it's key in the it's a feature in order to ensure innovation and it's good articulation with the private sector initiatives.
So I don't want to be unfair and especially not unfriendly. However, we told we are strictly in time, so it's exactly 10 o'clock. And I would like to hand over to our next moderator, to Mr. Haga, and he will take now the panel on the European retail payment market as a crossroad. Thank you very much to my audience. I would have liked to spend 2 hours more of discussion with you. Thank you very much.